Hello, my name is Grace Guetta Gonzalez with the Cooperative Extension Program, Bexar County, Prairie View A&M University. I am a family and community health agent here in Bexar County. Today I will do a presentation on COVID-19 financial navigation. The Coronavirus Aid, Relief, and Economic Security Act is referred to as the CARES Act. According to estimates, 90% of taxpayers should have received some amount of the recovery rebate. Thus, a single taxpayer with one child under 17 would be eligible for up to $17,000. $1,700 refundable credit, while a single taxpayer with two young children would be eligible for up to a $2,200 credit. A married couple, on the other hand, with one child who filed a joint return would be eligible up to a $2,900 credit, while the same couple with four children would be eligible for a $4,400 credit. If a single individual makes $85,000 a year, that is $10,000 over the $75,000 threshold, and their stimulus check would be $700. A married couple who makes $160,000 would receive $1,900. Over $99,000 for individuals and $198,000 married couples would not receive a check. The initial amount paid will be based on either a taxpayer's 2018 or 2019 income tax return, whichever the latest return that the IRS has on file. As for where the recovery rebate payments will be made, it depends. It appears that individuals receiving Social Security benefits will receive the recovery rebate in the same amount they receive their Social Security benefits. The CARES Act also authorizes recovery rebate payments to be made to the account into which a taxpayer's 2018-2019 refund was deposited. Other payments will be sent to the last known address on file. Student loan payments deferred until September 30th, 2020, Section 3513 suspends required repayments on federal student loans through September 30th, 2020. During this time, no interest will accrue on this debt. Unfortunately, though, while required payments are suspended, voluntary payments are not prohibited. Also notable is that this period of time will continue to count towards any loan forgiveness programs. Do I need to apply to suspend my payments? No. Federal student loan borrowers do not need to take any action to suspend payments. Your federal student loan servicer will suspend all payments without any action from you. You do not need to contact your student loan servicer. For the many who have already lost their jobs, and for the countless more who will likely find themselves subject to that same fate in the coming weeks, there is thankfully some relatively good news. Unemployment compensation benefits have been significantly expanded by the CARES Act. These enhancements include pandemic unemployment assistance, self-employed individuals who are generally ineligible for unemployment compensation benefits, and other individuals who are ineligible for regular unemployment, extended unemployment, or pandemic unemployment insurance, or run out of such insurance will be eligible for up to 39 weeks of benefits via this provision. Uncle Sam will cover unemployment for the first week of unemployment. The CARES Act offers to pay states to provide unemployment compensation benefits immediately without the normal 1-week waiting period. Regular unemployment compensation is bumped by $600 per week. Unemployment benefits can increase by up to $600 per week with federally funded dollars for up to 4 months. The average weekly unemployment benefit for most states is under $400. Thus, many individuals will see their unemployment checks increase by 150% or more, thanks to this part of the CARES Act. Unemployment compensation is extended by 13 weeks. In the event that people are nearing and ultimately reach the maximum goal amount of weeks of unemployment, compensation provided under state law. The CARES Act will allow them to receive such benefits for an additional quarter. contact your State Department of Labor office or website for more details. The definition of qualified medical expenses for purposes of health savings accounts, Archer Medical Savings accounts, and healthcare flexible spending accounts is expanded to include over-the-counter medications. There are a number of potential tax benefits associated with coronavirus-related distributions. More specifically, these include: number 1, exempt from the 10% penalty. Individuals under the age of 59 and a half may access retirement funds without the normal penalty that would otherwise apply. Number 2, not subject to mandatory withholding requirements. Typically eligible rollover distributions from employer-sponsored retirement plans are subject to mandatory federal withholding of at least 20%. Coronavirus-related distributions, however, are exempt from this requirement. Plans can rely on a participant's self-certification that they meet the requirements of a coronavirus-related distribution when processing a distribution without mandatory withholding. Number 3, suspend required minimum distributions, RMDs, during 2020 for traditional IRAs, SEP IRAs, and simple IRAs, as well as 401k, 403b, and governmental 457b plans. Furthermore, the relief applies to both retirement account owners themselves, as well as to the beneficiaries taking stretch distributions. Number 4, enhancements to loans from employer-sponsored retirement plans. Many employer-sponsored retirement plans, such as 401ks or 403bs, offer participants the options of taking a loan of a portion of their retirement assets. These include: maximum loan amount is increased to $100,000. In general, the maximum amount that may be borrowed from an employer plan is $50,000. The CARES Act doubles this amount for affected individuals. 100% of the vested balance may be used. In general, once an individual has a vested plan balance that exceeds $20,000, they are only eligible to take a loan of up to 50% of that amount, up to the normal maximum of $50,000. The CARES Act amends this rule for affected individuals, allowing them to take a loan equal to their vested plan balance, dollar for dollar, up to $100,000 maximum amount. Delay of payments. Any payments that would otherwise be owed on the plan loan from the date of enactment through the end of 2020 may be delayed for up to 1 year. Please note to check with your financial advisor before you make any decisions. This information is for educational purposes only. When it comes to financial fears, debt often tops the list of anxieties, and if it is not properly managed, will throw you for a loop. Whether you have credit card debt, student loan debt, or worried about losing your home or car, debt is often a major stress point in households. Some of you may never have been in the situation of dealing with sudden income loss before, like many are experiencing during COVID-19, the infectious disease caused by novel coronavirus. There are things you can do, and many creditors are offering deferment options. We will talk about each of them listed on this slide during your presentation. This slide shows some handouts that can be emailed to you. Resource guide, monthly plan, spending plan, prioritizing bills, debt log, creditor communication, and action plan. If you want these emailed to you after the presentation, you can shoot me an email and I'll be glad to send them to you. Also on Facebook, you can post on the comment box, and that would be a way to get your handouts as well. People use different ways to manage their money. If the answer to any of the following questions is yes, a spending plan may help prevent the problems described. Does your money seem to disappear before the next paycheck? Do you wonder where your money went? Do you have difficulty paying for basic needs like food or transportation? Do you need to borrow money to cover expenses each month? Do you pay some bills late every month? Do you receive collection notices for past due bills? Do you only pay the minimum on your credit accounts? Do you have trouble finding money for gifts and holiday shopping? Making a spending plan or creating a spending plan is a valuable tool to provide a feeling of control, detail income and expenses, prepare for unexpected expenses, understand how money is being spent, and how to reach your money goals. It is always important to develop a spending plan. A good way to do or how to develop one is you need to select a record keeping system. You can search for them online, or you can also talk to your financial advisor, and they may have a record keeping system that you can use already in place. You need to determine your total monthly income, list all your fixed monthly expenses, estimate flexible monthly expenses, rank financial goals and their costs, discuss your needs and wants, set up a regular savings plan, and revise that plan as needed. This will give you a sense of control over your money rather than letting money have control over you. It also helps you build assets that will improve the quality of life for you and your family. And it will also help reduce your anxiety of not knowing whether you have enough money to pay bills when they are due. This slide shows a money spending plan form. All you need to do is go over it, track your monthly spending, and also be honest about everything that you spend out and everything that you bring in. If you'd like this form, I can also email you this form as well. Here are steps to a spending plan. When you have listed all your income sources for each week, add the columns and write down the total at the bottom of each one. Then add up the weekly amounts to figure out your total monthly income. When you have listed all your expenses for each week, add the columns and write down the total. Then add up the weekly amounts to figure out your total monthly expenses. Compare the total numbers from your income tracker to your spending to understand if your income and expenses balance. Paraphrase the following. To manage a spending plan, sometimes changes need to be made. Changes can be less difficult if you have more than one idea to choose from. Making changes can also help you increase the money saved towards goals and other spending. After looking at your totals for income and expenses, how close were you to balancing? Now that you have everything written down, it is helpful to review and decide where you can make changes. Did you discover some spending leaks? Spending for wants that you can use instead of for needs? How will you adjust? By increasing income or decreasing expenses? Or a combination of both? Write down ways you will try. This is important because it will give you a better understanding of where your money goes. I'd like to ask everyone who's listening in on this presentation, have y'all ever created a spending plan before? If so, you can comment on the Facebook comment box. You can post yes or no, or if not, hopefully people do this. I do this every month because I do have bills that are outgoing, and of course I need to know where my money is heading towards. It is important because there are some financial goals that I want to attain, and in order for me to attain those goals, I need to write down how much money is going out, what I'm spending, and how much I can save each month. It is always good to have financial goals so that you can understand better what you would like to do with your money in the future. On the screen are the topics we will cover for this section on managing debt. By the end of this section, you should have a fairly solid plan in place for you and your family in order to remain sustainable and viable in these troubling times. Our goal for today is to help you discover your priorities, how to go about making sure your bills are paid, some danger signs to assist you in knowing when you may be getting in over your head, and breaking your debt down to know exactly how much you owe. Think about your process of paying bills. Who pays your bills? It is usually best to select one responsible person. Do you open your mail when it arrives? How do you usually pay your bills? Do you use cash, checks, money order, debit or credit card, online bill payment or mobile apps, or a prepaid card? What do you do with the statement after you pay your bill? A best practice is to place it in an organized record-keeping file folder, either hard copy or electronic. Keep most monthly payments as long as you need to, have proof of payment, or until it clears your financial account. Setting up a filing system is a way to go when you are trying to pay your bills. It is important to know how long to keep your documents, and it is important to understand your values as well as those of the people who live with you. Are you all savers or spenders? Where do you all agree or disagree? How do you all deal with differing ideas? Communicating and listening is important so that everyone is on board with the decisions that you can make together. In order to size up the situation, you need to look back to your spending plan. If you haven't created a spending plan, now is the time to do it. Look to see where your money is being spent. Track it to the penny. Look to your spending plan to see where you can make changes and decide on what extras you can do without for a while. Think about needs and wants. Can you go without the extra cable package, eating out, or stopping for a latte? Next, when you are looking at paying bills and need to prioritize, ask yourself this question: what will I lose if I don't pay this bill? If you don't pay your mortgage or rent, what do you lose? If you don't pay your car payment, what do you lose? When it comes to an item like child support, back taxes, and student loans, contact the appropriate authorities if you are struggling to make payments. For child support, speak with your attorney. For back taxes, contact your county treasurer's office. For student loans, contact your servicer. Ask them if there are any programs in place to assist you. Limit the use of credit cards as much as possible. Try not to add to your debt. If you are thinking about consolidation, then not adding additional debt is a must until any current debt is paid off. Make a plan and stick to it. Discipline is a must. When you have a month when you have more bills than income, how do you decide which bill to pay first? It is important to understand what might happen if you fall behind. Many creditors, including mortgage lenders, auto and credit card companies, are offering free deferments during the COVID-19 pandemic. This does not mean forgiveness, so you eventually will need to pay what you owe, but may be able to skip a payment for now. Think through the choices of which bills to pay or not to pay. What are your most critical needs versus non-essential bills? Then make a plan to pay the most important bills that month. Weigh the risk of not paying certain bills right now as they affect a job, housing, utilities, insurance, and other obligations. Consider the consequences of late or missed payments on particular debts. This will help you prioritize which bills to pay and which ones to call to ask about options. If a creditor agrees to work something out with you, ask for it in writing. Clients need to take precautions to limit the damage to their credit score. Prioritizing bills. This is page 3 in your resource attachment guide. This is so that you can write down your essential bills and think about the consequences of those you cannot pay or make arrangements with who you owe. You can download this on the resource guide if needed. When you're talking with creditors, make sure you have your information handy. Account number, verifying information and details about current situation, and ability to pay on time. Contact your creditors, which may be your landlord, student loan servicer, credit card company, or mortgage servicer, as soon as bill paying becomes an issue. It could save you from paying late fees and penalties. Creditors are more willing to work with you if you maintain contact with them. Make sure you are prepared when you contact your creditors. Have your information handy and be transparent with them. Don't lie. Be honest with your assessment of your situation. Follow through on any agreed upon payment plans. If you're having trouble making ends meet, contact your creditors immediately. Tell them why it's difficult for you and try to work out a modified payment plan that reduces your payments to a more manageable level. During the coronavirus epidemic, most creditors will be willing to work with you, but you must call them. Ask how to apply for their assistance program. Don't let your financial situation go from bad to worse. Face your creditors head on. If a debt collector contacts you, do not ignore it. Sometimes we put things off, which can make us feel like we are frozen and cannot move forward. Why do we procrastinate or put things off? If you receive a call from a creditor or collection agency, get the name of the creditor and the name and address and telephone number of the collection agency. Get the exact amount of the account that is claimed to be due. Write down the date and time of each call. Explain your current financial situation and tell how much of the bill you are able to pay, according to your repayment plan and your budget. If you believe you do not owe the amount claimed or disagree in other ways, make your reasons known promptly in writing to both the creditor and the collection agency. Sample letters of dispute are available. Be sure to keep copies of all correspondence. Here is a credit communication log. Keep notes of your communications with each of your creditors. This communication log is included in your resource packet. It lists the date you called or when they called you, who you talked to, name and employee identification number. Also, jot down what was discussed and any agreements that were made. You must have an accurate picture of exactly how much income you can count on each month and how much you need to pay for essential monthly living expenses. Then you can talk honestly with your creditors about your debts. Write down your notes and questions to keep track of all the details. Be prepared to explain the following: the reason you cannot pay, your current income and prospects for future income, other financial obligations you have, your plans to bring your current debt up to date and keep it current, including the amount you will be able to pay each month. Then write down what you and the creditor decided and what you need to do to follow up on what you committed to do. Here are some debt warning signs. If you cannot stop buying things you don't need or cannot afford. If you avoid looking at bills and credit card statements. If you've taken cash advances on a credit card to pay monthly expenses. And if you've charged more on credit cards than you pay each month. These are some warning signs that you need to think about and look at and understand clearly. Some other debt warning signs are: if you're not aware of how much money is needed each month to cover your living expenses, if you don't know how much is owed in total debt, if more than 15% of your take-home pay goes to credit payments, if you usually pay only the minimum on credit cards. After looking through all of these warning signs, the rule of thumb is if you said yes to any of these or to any of these statements, then there may be a problem with your use of credit. To avoid serious issues, make changes now. Work on one or two areas and then continue until all items are addressed. These are points for awareness to prevent additional credit issues, not to point blame. Make a comprehensive list of your creditors. Create your debt log by writing down how much you owe. You can find a How Much Do I Owe worksheet in your resource packet or the Assessing Your Financial Situation link. Start by listing all debts down the left-hand side of a piece of paper. For each line item, write the creditor, annual percentage of interest, balance remaining, debt priority, monthly payment amount, number of payments behind, dollar amount behind, and whether or not it is in collection. Creating the spreadsheet is a visual aid knowing what is owed and to whom. Enter your information on powerpay.org to calculate your debt repayment plan. I would just like to ask whoever is listening to this presentation, have you all ever created a comprehensive list of your creditors or have created a debt log? If you have, just comment on the Facebook comment box, or if not, just think about doing it if you haven't done it before. Please watch out for scams. There are people out there who are doing these things. Anyone promising stimulus money now, asking for fees before assistance, guarantees of a loan. If it sounds too good to be true, it probably is. So please watch out for these scams. There are two types of identity theft fraud. True name fraud, where the thief pretends to be another person. For example, a phone caller says they are a relative in trouble and asks for money to be sent on a gift card. They might say they have the novel coronavirus and the hospital requires an upfront payment, which they do not have, before the hospital retreat them. A second type is account takeover fraud, where the thief takes over your financial accounts and or opens new accounts in your name. An example is if they get a hold of your credit card number and personal information and purchase expensive items in another state where you have not been on that date. All of this can be reported to the FTC, which is the Federal Trade Commission, and there is a website, ftc.gov. Caution: please use secure web browsers when you are in the internet. A lock should appear in the web browser HTTPS secure. Log out or sign off. Do not just close the browser. Do not give personal information over a cell phone. Do not carry more information than you need. Do not keep Social Security cards or bank account info in your wallet. Several scams have already surfaced around the COVID-19 pandemic. Undelivered goods, which are online chains claiming to have much needed goods. What do? Check out the seller by searching online for the person or company's name, phone number, and email address, plus words like review, complaint, or scam. If everything checks out, pay by credit card and keep a record of your transaction. If you're concerned about the pricing of products in your area, contact your state consumer protection officials for a complete list of state attorneys general. Visit nng.org as well. There are fake charities. Do your research to ensure these are legitimate charities. Many use names to appear as legitimate charity groups. What do if you see these charity groups? Use these organizations to help you research charities. When you pay safely by credit card, never by gift card or wire transfer. Robocalls, fake coronavirus cures to work at home schemes. What do if that occurs? You need to hang up. Don't press any numbers as well. The recording might say that pressing a number will let you speak to a live operator or remove you from their call lists, but it might lead to more robocalls instead. Misinformation and rumors. Scammers and sometimes well-meaning individuals share information that is not accurate. What do? Before you pass on any messages, and certainly before you pay someone or share your personal information, do some fact checking by contacting trusted resources. For information related to the coronavirus, visit What the U.S. Government is Doing, where you find links to federal, state, and local government agencies. To learn more, visit Coronavirus Scams, What the FTC is Doing at ftc.gov/coronavirus. Centers for Disease Control and Prevention at Coronavirus Disease 2019 COVID-19. Want more information on the latest scams we're seeing? Sign up for our consumer alerts. If you come across any scams or suspicious claims, report them to the FTC at ftc.gov/complaint. Here are some important things to do if you have been a victim of identity theft or identity fraud. You need to take action immediately. You need to contact all three credit bureaus, contact all banks and creditors, report the crime to ftc.gov and your local police. Keep a copy of the report. Monitor your mail for new accounts opened in your name, and monitor your credit reports for inaccuracies. Here are some more things you need to do if you are a victim of identity theft. If you're having problems with a creditor or lender, contact the cfbp.gov website. Use a phone scam blocker application on your phone. Also, if somebody is calling you, you need to hang up. Don't press any numbers. The recording might say that pressing a number will let you speak to a live operator or remove you from their call list, but it might lead to more robocalls instead. Pre-screened offers by calling 1-888-5-OPT-OUT or visit optoutprescreen.com. Telemarketing by visiting donotcall.gov, or you can call the 1-888-382-122 number. Receiving unsolicited commercial mail and email for Direct Marketers Association members, you can visit the www.dmachoice.org. Links and phone numbers are on your resource handouts if you do ask for those. Thank you for listening in to this presentation. If you have any questions or need any more information, please contact me at grguetta@pvamu.edu or gguetta@ag.tamu.edu. You could also call our extension office. It is 210-631-0400. If you would like more information on any topics about financial literacy or any other topic on nutrition, health and wellness, please contact me through Facebook, or you can also email me. Thank you and have a great day.